All right, hello everybody. Today we're gonna do pre-screening. So we've already the original three stocks that we identified. I want to say a couple of days ago, we did a pre-screening and found three stocks: Morinaga, Ichikin, and Zet. And so we have on our YouTube channel, essentially, go to home. We did a stock review of Morinaga, Ichikin, and Zet, of all three. If you guys want a recap of those stocks, all you have to do is literally click into any of the videos, and the first comment will be recap. Just click at the timeline, and it will go directly to the recap, where you can hear about my initial impressions of the company. So yeah, this was going to be just a series that I'll be consistently doing. It helps me find new stocks to look at and to perform potential deep dives. And yeah, I just think it's an interesting format, something I'm experimenting with. And so yeah, today we're going to be doing some pre-screening of some stocks that I've seen that I want to just to see if there's potential in those stocks. And I also asked in a post today if you guys have any potential companies that you guys want me to look at, and Talk Soon Capital offered 8737, so that's going to be one of the stocks that we're going to be looking at. So I'm gonna putting that in here. Put that there. So we're gonna look at that. We can do it right now, actually. Oh, Akatsuki Corp. I remember. Is this the video game company? One sec. Oh, this is different. This is different from the other Akatsuki. The other Akatsuki, I know they have the this game on the app that's for Dragon Ball. This is very different. So this one is Akatsuki Corp, together with its subsidiary, engages in real estate and securities business. It plans, designs, construction, realizes used real estate properties, as well as sells renovated and furnished apartments. The company also develops paid nursing homes and trunk room rental services. Trunk room rental services. Maybe like this might be what's it called? These might be what are those things called again? Capsule. Maybe they rent capsule hotels, capsule rooms. In addition, is involved in the architectural design and supervision. The company is formerly known as Akatsuki Financial Group, and changed its name to Akatsuki Corp in July 2016. All right, cool. Let's take a quick look at the profitability of the company. Oh, ROE increased substantially recently. Even margins have been increasing over the years, which is good. SG&A has been dropping, which is nice, and net income has increased. So, look at that snapshot earlier. The stock price has been trailing up due to increase in margin, which is good. What else? Take a look at the income statement. Well, revenues have essentially doubled in the last 4 years, and since 2016 is almost 10x. So they're doing something interesting. They're growing revenues quite substantially, which is nice. Operating income has also increased drastically. Interesting. I'm curious about, like, this was interesting. This does look interesting. So we're Suki Corp 737 real estate. Cool. Let's take a look at their enterprise value. Oh, very interesting. So market cap has doubled. They have a lot of cash and a lot of debt. So enterprise value has actually dropped. Interesting. Curious why they don't just pay down debt. Interesting. Are they saving up to buy up some like financial company? 2 times EV EBIT. That's very cheap. That is very cheap. They have good margins. They're very cheap. A lot of cash, a lot of debt though. Interesting. Multiple. Under 1 times book. Oh, very nice. Okay. Very cool. This is definitely worth looking into. So, thanks a lot, Talk Soon Capital. That's very interesting. Cool. So this would be added to the list for sure. If we could look at the companies, IR. See if they have English. Looks like mainly Japanese. Okay. They even have a finance presentation for the Akatsuki Securities division. Interesting. Oh, they have an English. The English version, very nice. Don't know what this is. This has some commentary to it. That's cool that they have English version. Here. Third document that I opened. 3. They don't have an English website, eh? Okay, I'm gonna quickly save these files, and then what I'll do in a bit is essentially translate them in a bit. It's May 21st. What is the 4th document? The 4th document is regarding the financial results of a consolidated subsidiary. Okay. What's the ticker of their consolidated subsidiary then? Akatsuki Financial, is that what it's called? Akatsuki, what is their subsidiary called? I think it was financial. Security. Oops, that's okay. Is there a? Let me just open another. Is there a ticker for that? Nope. Nope, there is not. Okay. Let's quickly just look at this for now. So margins wise, they're at operating revenues, net operating revenues. Net operating revenues, ordinary income. So if I'm basing it off of net operating revenues, then this would be over 20% for sure for operating income margin. I don't know which one it is. So I'll just use the conservative one of 9% right now. We could say like, sure, this works too. If based off of net operating revenues, then 20 to 30%. Something like that. Most recent one is 68718. 61718. 2015, 2016 was, I believe, in the 5K, 6K region, 6 billion, 5 billion region. 5391. Damn, okay. Hmm. $30. Nice. Okay. So they haven't released an actual annual figure here. So regarding the forecast of consolidated business results for the fiscal year ending March 2027, although business operations remain solid, the company is currently assessing the potential impact on group performance from possible changes in the business environment, including heightened tensions in the Middle East and trends in interest rate levels. The forecast is scheduled to be disclosed promptly once finalized, together with multi-year management financial targets. Okay, so that we have nothing right now. We have absolutely nothing. So we can base it off of the last year results for now. Should be fine. There are no financial statements here. What the fuck? Okay, then I need to convert their most recent one. Let me give me a second here. Let's see. All right. So, this document, similar, 68, yeah. Koyfin, no annual forecast. Okay, just gonna assets real quick. Assets 1469 839. Hold on, let's see. Thousands of yen. So 14629. Deposit. Ooh, this is interesting. They have a securities department. So I don't know what type of deposit this is. Is this margin trading assets, contractual trading products. So because they have a securities deposit portion, right? I don't know if they have like a broker or something, and then they have deposits from that. It generates some interest income, you know. Okay. How to say? I will have to look into that a little bit. Margin trading assets, credit loans, collateral for more securities and margin trading. Security deposit, real estate for sale, yeah. Fixed assets, buildings, land. Assets, investment securities. Okay, we will use conservative approach. I just do that for now. We'll have to look into that other part in a bit later. Debt. Long-term loans scheduled to be paid within 1 year. Non-recourse loans, long-term loans with repayment due within 1 year. 50. Unpaid corporate taxes, nope. Long-term borrowings, something. 8.75. 395. Liabilities related to retirement benefits. Provision for granting stock as it is. Fixed debt total. About fixed debt on there. I think that's fine. Yes. Huh. Yeah, I've looked into the deposit part. For sure. 100%. And then, EBIT for this year was 277. The stock price is definitely not right now. 5.99. 5.99. 6277. Haven't done that yet. Net income for all 5.2. And then you gotta look at book value. Tier 1697071 NCI of 679. Small portion. Okay, cool. Yeah, let me just double check. Okay, let me figure out what this company truly does before I make a decision on the deposits. Interesting. Very interesting that they have securities related business. Um, they acquired 33% of Shin Securities Sakamoto. Total assets under management at JWA's partner financial institution, including managed assets, expanded to 803 billion, increasing 177 billion since last year. I wonder what their edge is in terms of their brokerage. Like, is it cost? Is it? I really don't know. Interesting that they're making money now. Revenues increase from AUM and trading. Let me quickly close my door. Okay, so real estate related business. My place which buys and sells used condos. Striving to expand its business in the greater Tokyo area and Kansai area. By expanding its sales force and strengthening its partnership with real estate agencies. In the consolidated fiscal year, we acquired 847 units compared to 777 units in the previous year and sold 800. Who the fuck's car is that now? And sold 880 units. Furthermore, the Biotech Group, which handles the design and construction of renovations, saw steady progress with 1,085 completed units. They acquired 847. They designed and renovated 1,085, and they sold 880. Interesting. EW Asset Management develops facilities for elderly open Medicare Iyashi Obaka Nagasumi in Fukuoka. Medicare Iyashi Hanazono in Kumamoto City was sold. They have 3 elderly care facilities now. Okay. So they said the strong market environment for used condos led to higher sales prices, particularly for properties in the city center, resulting in improved profit margins. In addition, the sale of elderly care facilities contributed to increased revenue and profits. Interesting. Buy and sell used condos. And they do fixer-uppers. Design and construction and renovation. Oh, maybe they also help with just renovation. Just simply renovation. For like, if you're a client and you want to redesign your apartment, you could go to them as well. Maybe that's what Baltic Group is. In addition to retail sales, Akatsuki Securities is strategically strengthening its IFA, independent financial advisor business, partnering with regional financial institutions and enhancing its advisory capabilities through the use of AI and fintech. In particular, its IFA business, which is entered in earnest in 2014, is showing an upward trend. The following is supplementary information from Japan Wealth Advisors, a subsidiary of Akatsuki Securities. Independent financial advisor business. Let's see, second quarter. AUM has consistently increased, which is good. Assets under management, including IFA. The total balance of assets under management at partner financial institutions of Akatsuki Securities and Japan Wealth Advisors is what's the note referring to? Starting October 2025, the classification of some customers' assets under management will be changed from Wealth Management Division to the Financial Intermediation Services Division. The category has been changed to S accordingly. Figures prior to October 2025 have been retroactively updated. Give me 1 sec to think about this. Assets under management. Akatsuki Securities. They generated operating revenue of 5 billion, operating profit 783, operating profit. So it's like 10% margin. That's pretty good. AUM is going up, so there should be margin expansion, right? 783, 800 on 500. Okay. Yeah. Very nice. My Place operates a used condo business targeting first-time homebuyers in the greater Tokyo area, primarily Tokyo and Kanagawa prefectures, and the Kansai area, primarily Osaka prefectures. There are 2 types of business models: purchasing a vacant used condo with no tenants. Purchasing a vacant used condo with no tenants, immediately renovating it and then selling it. Purchasing a used condo with tenants, receiving rental income for a certain period, renovating it after the tenants vacate, and then selling it, which is type B. In addition, Baltec Group provides renovation, design, and construction services to My Place. External buy and resell businesses. Interesting. Okay, the following supplementary information linking My Place, Baltec, and My Planner. With internal transactions between the 3 companies removed. Okay, so some of the revenues within Baltec are for My Place. Operating profit close to 9%. Type A, acquisition status of used condos by quarterly accounting in parentheses. So type A, so majority of them have no tenants, some of them have tenants, and they wait for them to leave, and then they, yeah. So they acquire 230, 434, 460. Okay. Sorry, 660, and then like around 850. Okay. Sales status of used condos by quarterly accounting. Figures in parentheses indicate increase or decrease compared to same quarterly accounting period of the previous year. So 202, 107, 203. So the amount that they buy is slightly more than the amount that they sell, but then I guess in these 2 quarters they sell more than they actually bought. So it's good that their, inventory and that stuff matches. Inventory size of used condos and period. So they have inventory of 723. But each quarter they sell around 240 something. Interesting. Number of renovation projects completed by Baltech per quarter. So they're pretty fast. But the amount that they sell is also similar to how many renovations that they do. Does Baltech do renovations for other companies? And external buy and resell businesses. So it's not exclusive to just them, they also help out other companies too. Interesting. Well, this is mainly due to an increase of 10.897 million yen in deposits, 955 million yen in credit loans, and 3.9 billion yen in real estate held for sale. So they believe tensions in the Middle East and trends in interest rate. I think that trend in interest rate is the most important. They don't have a forecast yet. Total number of development projects, including acquisition of 2 operational properties. Oh, they do? Okay, interesting. So they buy and sell, and they also develop. Cash and deposits, and then there's deposit. I need additional color in this scenario. I think I need to read their securities report just to get a better understanding of really what the business does. But this is interesting. This is interesting. Parent company shareholder profits of 40 billion. Security business is strong. The business of buying and selling used condos is seeing improved profit margins, and the business of developing facilities for the elderly. Oh, I see what it means. Okay. Develop. Right, to develop for elderly. This is in billion yen. I think this should be in 10 million yen is what it means. Sorry, this means this is not accurate. So this is actually 68.7 billion yen. What is that? In 100 million. Increments of 100 million, essentially. This is again wrong. This is 6.26. Yeah, this is in increments of 100 million yen. So this is 6.2. Yeah, so whatever figure you see here, just do like a times it by 10%. Remove the decimal place 1 to the left, essentially. Very curious how they're able to procure customers. Yeah. Okay, Akatsuki is a holding company. They have 4. So the securities business, which is wealth advisors. They have buying and selling of used condos, development of facilities for the elderly, which is EW Asset Management. And then securities investment business, book value, market value. So they have their own fund. Let me just take a look at that real quick. Book value is 4. 3 and 4. What is that? Includes investments from Akatsuki headquarters, Akatsuki Securities, My Place, and Akatsuki Capital. Here's investment. Market value based on evaluation reports from investee committees. So I think this maybe is this part. Yeah, so it's actually worth 8.3. So it's even cheaper. Five-year management plan is to increase shareholder equity for the fiscal year 2026. Return through dividends, share buybacks. The company has set a target of 23 billion yen, but achieved 24.8 in the fiscal year 2026, thus meeting the goal. So they buy back around 2.3 billion each year on a market cap of 18. They're buying back 10% of the company. The price book is 0.84. Oh, there's really low downside then if that's the case. Total number of development projects 13, includes acquisition of 2 operational properties. But from 2022 to 2026, they developed 13. Sales volume 880. AUM. Selling capacity is increased. Real estate segment, used condos, sales volume, and sales price, average sale price. Sales volume has gone up. Average sales price has also gone up. Very nice. They're also expanding into Kansai, which is around Osaka. Interesting. This is Kanto region. It's 253. I don't know what this is. This I don't know either. I need to Google lens that. No clue. What is this? Is this Osaka? Kansai. Osaka, Kyoto, Hyogo, Nara, Shiga, Wakayama. What is this? What is this? Kanagawa. Bordering in the located in the Kanto region, bordering Tokyo to the north, Yamanishi and Shizuoka to the west, and facing the Tokyo Bay and Sagami Bay. With approximately 9.2 million residents. Second highest population in Japan, following Tokyo. Okay. Tokyo, Kanagawa, and then this is other, I guess. Other Kanto areas. Okay, so they've kind of so that means that tells me that their sale of used and new condos can actually increase over time. There's actually growth there. More growth down the line for sale of used and new condos as they are expanding out of Kanto region and into Kansai region. Interesting. Interesting. The average project duration per unit was 209 days, down 20 days compared to the same period. What did they do? Completion of work, sale settlement, sale took 120 days earlier. Start of construction. Purchase settlement takes 14 days, 16 days. Start of construction, completion 61 to 64 days. So they're spending more time on renovations and completion of work. Interesting. Lower inventories. I would like to see lower inventory. Lower inventories is always good. Vacant and tenant included. Half. Well, vacant is more convenient to flip, right? If there's a tenant included, then they're taking on a little bit of risk. A little bit of a... Yeah. Alright, selling price, sales volume went up. Vacant, tenant included. Vacant. That's interesting. I'm trying to think about why the inventory mix is such a way. Tenant included. They might be generating rental income then. So maybe they're purposely generating rental income. Let me think about that for a sec. Rental income. The rental income is in terms of the cap rates pretty low actually. 4%. Probably in Tokyo. I mean, the income probably services the debt quite well. Interesting. Number of completed work hours for renovation projects. Number of construction projects, 1,085. So My Place properties for external customers. So majority of them are for My Place properties, and then they have customer base for external customers. Going forward, we plan to actively expand our orders for construction work from external customers. EW Asset Management, which is building senior elderly care facilities. See, 2019, sold in 2023. Completed in 2022, sold in 2025, completed in 2022, sold in 2023, 2022, 2022. They're just building these elderly care facilities and selling. They have 3 coming online. Completed. Oh, one's completed. Completed. So 3 have been completed but haven't been sold. And they're taking it 1 year, 1 year, 3 years, 4 years. Land acquisition for development. Completion. Land acquisition for development. So they only made an investment on land and just sold it. They didn't really complete it. Development, completion, investment. So they bought an existing facility and sold it. For the securities segment, please refer to consolidated financial statements for Akatsuki Securities and Japan Wealth Advisors, attachment page 24 onwards. Okay, so this is definitely worth looking into, and I think we've gone deep enough. I just want to look into right now the deposits. So Hmm. The 3, 4, 6, 9, 7 actually could just be looking into it right now, and it looks like it is to do with segregated client cash and exchange collateral, which is offset by segregated broker liabilities. So this is just customer deposits. I think they're separate. So if we look at that, I believe. And then we can remove one of the line items here for the what is that, deposit 28. I have to look at the, let me give me 1 sec. Just want to double check. Okay, yeah, I'm pretty sure this is like broker's deposits. And then customer deposits. Yeah. Yeah, so I have to return that back. So yeah, I'll remove the 28 portion. I would remove that portion. 28. Did I mess up here? Hold on. Deposits, deposit, short-term corporate bonds, short-term borrowings. Long-term loans. Oh, I don't even have that in there. 728, 28, 32, 32, 32, let's say around 10. That's 42. Yeah, that's around there. 2395, yeah. 2395, 77, 50, 4399, 21. So, okay, yeah, they're, yeah. Well, this is actually the right one. This is genuinely the right one. And we just have the normal cash here. But they said this is valued at 8. Yeah. Three, 4, 6, 9, 7. Oh, the same. Yeah, 3, 4. Yeah, so this is from securities. Yeah, Akatsuki Securities. That's from there. That's from. And yeah, 28238. 28238. Similar. 849. 849. Yeah. Okay, yeah. So this is actually the accurate one here. I think I can double check it later, but it looks like that. More debt. Definitely they can pay it now. Yeah, this is a great company. They can definitely grow into their debt. Because they generate so much cash though, so this is not up to date. Let's fill that up. I really like this business. This business is super cheap. Yeah, and they can definitely grow into their debt because they're doing well. They're generating a lot of cash flow. And the thing is, the securities business is a low margin business, so they definitely can pay down their debt over time. Margin's pretty damn good. Consistently growing revenues. So this is cheap. This is just cheap. This is like an A rating for me. E minus A. This is not in my circle of confidence though, but I did. This is definitely, these numbers look good to me. Yes, they're very levered, but then they have the cash flow to be able to pay it down over time. 43. What's their interest expense? What is their interest expense? Let's see. On an annual basis, interest expense is 684. Let me just type that in real quick. Yeah, they can definitely cover interest. That's fine. Don't see any issues with paying down interest. Let me just double check the actual filing. Okay, let's see here. Interest and dividends received. Investment partnership operating profit. Gains from sale of investment securities. Real estate acquisition tax refund. Yeah, it's close enough. Yeah, interest payments, 188. Payment fees. What are payment fees? 188. 88 million payment fees. Don't know what that is. Maybe like transaction fees. Not really sure. But yeah, low enough where they definitely can basically put a big dent into enterprise value every single year. Book value would probably just increase every single year. Well, it's crazy to me why this company is so undervalued. 5 times P. I think it should be trading at more. This shouldn't be price accurate. 1 second. Yeah, 599. Hmm. I really like it. I think it's dope. Market cap. 9 times. Yeah, yeah. Yeah, enterprise value 44 million. 26. Yeah, this is about, same conclusion. No, this is definitely worth looking into. Good margins, growing securities business, growing real estate business. Yeah, there's growth here. But they definitely have places where they can allocate cash and just use the cash to pay down debt. That's pretty much it. Pretty cool. Yeah, just definitely looking into it. This is 8737, so that was a great pick. Thank you very much to the person who pitched it to me. I think this is a great company. Okay, next company. I'm gonna take a quick. Give me a good 5-minute break just to grab water. Okay, we are back. Yeah, so the company we were looking at earlier was okay. Next company. Three one four three Oil Corporation. This stock also has been climbing. Let's see, what do they do? So Oil Corporation engages in the import, export, and sale of food and drink materials in Japan and internationally. The company provides vitamin, calcium, amino acid, emulsifier, stabilizer, nutritional fortifier, a bunch of shit here. Also offers pasteurized milk, concentrated milk, powdered milk, cream, fermented milk, butter, cheese, and other dairy products, fruits, and vegetable juices. Canned foods, frozen foods. Okay, so food, beverages. They also import fish, eggs, sushi, toppings. Okay, so very food-related business. Further, it offers wastewater treatment systems. That's very unrelated. Smart ceiling fans, nozzle type steam traps. Okay, interesting. How are their margins? Let's take a look. Very low. Very low. Are they another wholesaler? Are they a wholesaler? I wonder. What's their income statement looking like? 41, 42, 27. So it's gone up 50% roughly over the last 10 years. Operating margin 1.4 billion. Operating profit increased 4 times or more. Interest expense. PE of around less than 8 times. 7.5. Price value here. They have debt. They have debt. 1.5 billion in cash. Okay, interesting. Engages in the import and export and sale of food and good drink materials in Japan internationally. So yeah, this is pretty much logistics. Logistics. Seems like logistics. English side. It's a trading house. It's a trading house. Do they have investor relations with the they don't. I don't think they do. have one document. They have one document and calls it like, oh, download all your documents all at once. Okay. They don't have that information. Hmm. Okay, they have no investment presentations. They just have financial statements. Yeah, fair enough. Oh, they do.
右側、新高やアメリカ、カリフォルニア州にある。本日の説明
Where's the document for this?
2023月
Where is the document? I don't know what any of this means. Restore layout. Help. No, I don't need help. Okay. Interesting. Nope. Nope. Has to be somewhere. Documents? Nope. I think maybe this got deleted. I think maybe this accidentally got deleted. Nope, that's exactly that. Hmm. I mean, I guess I can just look at each one of these and it should be fine. What the crap is this thing? Oh, they do fire lattes, so they do drinks. I think it says ingredients. Dairy ingredients. Take a look at this. I guess it's fine. I can read it off from this, I guess. Not as ideal. Fans. Seafood. This is ginger. I don't know what this is. Sushi. Labor costs increasing. ROE of 19%. Okay, let me quickly convert their financial statement. And I'll have a better picture. What's the most recent one? That is not their most recent one. This is the most recent one. Okay. I'm gonna quickly download this. Historical income statement. Let's see. Let's see. What was the revenue again? 27802. 2016. Yeah. Okay. $22 different meals. That's 668. $5.45 million shares. Golf club membership. Golf club membership. What the fuck? What? That's my first time seeing that. That's an investment, bro? I mean, I guess. I mean, they could probably resell the golf club membership for money. Some places are very exclusive, so yeah, you could sell it. I don't know about that though, but oh, that's very interesting. That's very funny. I'm first time seeing that in my life. I might snip that for later. That is hilarious. I mean, yeah, it definitely can be a business expense, and it can, like, you know, yeah, pretty funny. And then liabilities. Okay. Interesting. Let's double check. Funds plus 70 savings obligations. Corporate bonds, long-term borrowings, lease. Okay. Book value. Okay. More debt. I wonder if they invest in some like factories or whatever. This is probably a more conservative estimate for them, if I were to guess. Yeah, 3.3% div yield, 1 times book. Decently low EV, but business is growing, but it's just dependent on if they can import export well. So pretty much like a wholesaler, or they call it a trading house. Yeah, it should do fine. And then the question is like, I guess my question is, how did they generate that debt? When did that debt come into play? 2 billion, 2 billion, 6 billion, 2025. Is there cash? What's this cash flow statement say? So 2025, we had income 1.2. Investing activities. So not much capex. Cash acquisition. That's a cash. Positive cash flow though. Divestiture, investment. Not a lot here though. They issued a lot of debt though. 2.5, 2.9. So why? Why did they issue that much debt? Net decrease and increase in loans, original and sold. Long-term debt issued. It kept issuing debt. Or what? Long-term debt repaid. Oh, so they had a portion of long-term debt that had to be repaid. That makes sense. Dividends paid. Change in cash, 1 billion. Where did that come from? Enterprise value. Debt increased by 2 billion. 2.5 billion. 2.5 billion. Inventories increase, accounts payable increase. That's not good. Yeah, debt went up 2.5 billion. Debt repaid, so they debt issued, debt repaid net of 800. A change in cash of 1 billion. What? That doesn't explain why debt increased that much. Weird. They had to have acquired something, I feel. Let's look at okay, let's see here. Inventory went up. Cash went up a little bit. No, debt went up. Net interest bearing debt went up. Interesting. Still doesn't explain the increase in debt though. Because this one increase in debt 2.8, still 1.2 billion increase in debt. Then there's a way larger one. Way larger. Net interest bearing debt 1.5 change. Total interest bearing debt changed by 2.5. How does that happen? 1.8, a 1 billion difference. This is a almost 1.4, 1.5 difference. Acquisition of subsidiary shares. Okay, that makes sense. Income from loan recovery. Expenditure for acquisition of investment securities. So that's one part. Repayment of long-term loans. Income from long-term borrowing. 2.5. Dividend payout. Okay, that makes sense. Let's see, low margin business. Well, that's quite a bit of debt. But to service that debt isn't going to be costly because they have a lot of EBIT. So they can definitely pay it down. Revenues have continued to increase. Interesting how they've been at 3%, now they're saying 2.8, but interest payments 1245.73, so pretty low, They can definitely service it. Yeah, they're probably gonna pay down that debt, and what happens is over time they're gonna go 6 times, 7 times. think it's probably a very stable performer. I don't see it like, I don't see anything like worth that much time to spend on it. 3.3% div yield. Yeah, just pay back debt pretty much. I don't know, this seems pretty, I don't know, pretty fairly valued, I would say. Let's give it a B. It's not investment advice. Okay, I'm going to take another break and be right back. And the next stock I will be looking at will be SPK. SPK 7466. Yeah. All right, on to the next company, SPK 7466. Yeah. Well, very, very linear. 600. Exactly in 7 years, it double, basically. Or actually a little bit more than double, 2.5 times, but what do they do? So they engage in trading of automotive spare parts and accessories and industrial vehicle parts. Japan, Asia, Oceania. So there's some overseas revenue, which is nice. Company offers engines, drivetrains, brake suspension, electrical, and air conditioning parts. They also supply automotive aftermarket parts and accessories, machinery parts, components, multifunction displays, integrated switches, dials, telematic equipment, and electrical components such as lamps, resin parts, and functional parts of the manufacturers of construction vehicles, forklifts, and tractors. The company was formerly known as Daido Automotive Enterprising. Daido sounds very familiar. Okay, take a look at their profitability. Okay. ROE of above 9%, EBIT margin around 5%, income kind of low, enterprise value 25 billion market cap, a little bit more cash than debt, low single digit EBIT margin, multiples 4.3. What's the income statement? What is the income statement? 75. And then 10 years ago was 39. 39, dropped to 38, now it's 75, almost double. Almost double. Operating income went to 3.6, whereas it was around 1.6 before. Okay, more than double as well. Income 2.7, 1.1. Okay, so everything is double, which is why the stock price has also doubled in this time frame. Cool. So the only potential area where we can see some growth is especially if they have some investment securities. SPK Engineering, Materials, Global. Okay, global site, IR. Really hasn't really released anything. Share split, year-end dividend forecast, personnel change, financials. A little bit delayed, I guess. Probably have to look at the global one. 9593. Okay, 6. Their dividend 41. Oh, they lowered it. Interesting. They lowered it. Okay. Oh, that's pretty stable margins, but not much operating leverage. Sadly, revenues are going up, but margins are staying the same. Probably this company is also similar in that they just they just have staple margins on car parts that they do on a standard basis amongst these manufacturers. So then they just play the role of a middleman pretty much. And that's PE 6 times. I mean, it's not expensive, but it's not cheap. But what's the upside potential here? You know, the question becomes like, what's the growth rate potential of this? So I mean, it's interesting. It's probably worth looking at. It doesn't take that long to figure out like whether it's worth it or not. But this is, I guess, this is interesting. Not like too undervalued or anything, but it's like probably B plus, in my opinion. Non-investment advice. Yeah, margins. You know, spike revenue going up quite a bit actually. Wonder what is driving that growth. Their car parts, secondhand car parts, aftermarket parts, that sort of thing is consistent revenue growth. That's really good. Consistent operating profit and expansion. No operating leverage whatsoever. Strong domestic sales for aftermarket parts for individual automobiles. Decreased profit margins due to the U.S. tariffs. Great contribution from domestic automotive aftermarket business at Blitz. Significant decline in profits in the U.S. subsidiary. Increased investment in human capital. Increased labor costs, increased logistics costs, other expense increases. Strong sales of automotive aftermarket parts and effect of consolidating Blitz company. Gross profit increased to 1565. Investment in human capital. ROE 9.6%. Cash in, cash out. Cash in, operating cash flow, fundraising, M&A, growth investment, IT 1 billion, shareholder returns 2 billion over 3 years. Did they actually do any M&A? In progress. What's their progress? M&A is 3.7 billion. Of what though? What did they buy? Domestic division, overseas division, 37% of revenues. Okay. Domestic, maintaining the number of vehicles owned and robust number of after-sales repairs parts due to longer lifespan of vehicles. Our main products include private label items, battery, suspension, components, wipers, air conditioning are selling well, while the performance of domestic consolidated group companies declined due to some difficulties with domestic and international customers. Overall performance remains strong. So yes, sales keep increasing, operating profit stable. Overseas sales division sales increased by 10%, while operating profit decreased by 10%. Supported by robust demand for overseas automotive aftermarket parts and strong sales of new products, the company performed well in the third quarter, but struggled in the fourth quarter due to the impact of Middle East, right? All logistic costs. Machinery sales division. Sales of construction agriculture machinery progress smoothly, but sales of forklift components in North America, Japan, and Europe remain sluggish. CUSPA sales headquarters. What is this? We will promote collaboration with Blitz, partner with new automakers, and strengthen our simulator-related business. Simulator related. Oh, I saw a picture of them doing a kid in a car simulator. So I don't know if that's like part of their expansion thing. Amidst a challenging environment characterized by rising raw materials, we have revised the pricing of our own branded products, reviewing our shipping fee structure, and implementing selective and focused investment. I don't know what Blitz is, but that would be interesting. Customization parts, Blitz, planning, manufacturing, and sale of automotive aftermarket parts, high brand recognition, strong and customized. I don't know what that is. Pro, automotive coding and various wrapping services. The same technical training school has 367 franchise locations. Construction, agricultural. Houston-based parts supplier for construction and agricultural machinery manufacturers is struggling due to declining demand in the United States. Those figures has declined. SMC, a Bangkok-based company that sells automotive aftermarket parts and parts to construction and agricultural machinery manufacturers. That's gone up. NTP, a Los Angeles-based automotive aftermarket parts sales company, reports record high sales and operating profits. So that's good. Singaporean automotive aftermarket parts subsidiary Hokosha, major regional parts dealer in Tokushima Prefecture, joined the SPK Group in 2023 and is currently promoting logistics reforms and other initiatives. Brake fluid, coolant, oil, and are sold domestically and internationally under the TCL brand. Heard of TCL before? Isn't that like a... Sounds like a TV. Domestic sales for aftermarket parts for forklifts. It's increased. Interesting. So I guess they are acquiring businesses. So then the angle for this company is like they're going through acquisition. So they would be able to utilize this cash, even though they don't have that much. But I guess they can grow through that. If that's the angle, then it would be growth from M&A. Potential there. As a base for strategic collaboration with Daihatsu Motor, we have opened the SPK Daihatsu Ikeda plant, which within the company's headquarters. The plant will serve as a core base for promoting business activities more quickly and smoothly, strengthening cooperation between the two companies. As the first phase, I would actually look into the cross shareholdings. What are the cross shareholdings? Like, what other company has like majority shares in this company? The first phase of the project, we held a lottery sale for a complete car developed the concept of making the joy of driving accessible for everyone. We received far more applications than anticipated and garnered significant market interest. Jakarta representative office open Jakarta. Investment in Mexico. Support the Super Taiku participation project. Through the use of simulator labs and other initiatives, we will support the challenges of young people who will lead the next generation and contribute to the revitalization of the mobility industry and society as a whole. Introduction of mobile simulators. It originated from an internal company idea contest. We will create a mobile simulator to promote sales and discover new business opportunities. What is the purpose of that, though? To show the performance improvements of their aftermarket parts? Like, I'm not really sure. Forecast earnings. With robust demand expected in the automotive aftermarket parts business, sales are projected to increase with continued expansion of investment in human capital. Operating profit is projected to increase. With dividend payments, ordinary profit is up. Okay. Dividend distribution. They expect to increase dividend over time. Oh, that's good. I don't know, I don't really see much like, you know, anything major here that is like that is wowing me, you know. Yeah, I maintain B plus here. I maintain B plus here. So yeah, out of the three companies today that we looked at, legitimately the Akatsuki Corp is the most interesting out of the three opportunities, for a couple of reasons. Number one is that they're securities business. Akatsuki Securities is a growing segment in the company. And also there, it seems like they're going to be expanding outside of Kanto region into the Kansai region. So that would lead to more potential for growth in sales. They have a different from most Japanese companies. They actually have a lot more debt, but this is not debt used in a poor way. It's debt used in a good way to finance growth. And given they are so cash flow positive, they can definitely like pay. The debt will be reduced over time, in my opinion. Their assets under management is growing, right? So this is like just free money kind of in a way. Of course, the currently Japanese market is doing well. It's up 60 something percent over the last year, from 2025 until now. So what could happen potentially that is of risk for this company would be if the market were to tank. Then AUM goes down, A comes down, their earnings goes down. But it's good that they're diversified across sale of condos and also the securities portion, because if the real estate economy is not doing as well, well, actually there is some level of correlation in that, like if the economy is not doing well, stock market's not doing well, people have less money to purchase real estate. But it seems like hmm, hmm. Is it a double whammy? What I was going to say is that if real estate doesn't do well, then their securities could also be doing well. And then if their real estate is not doing well, then the securities could be doing well. So you have one is a little bit of diversification there, but there is some level of correlation based off of the economy. Yeah, if interest rates are low, then people are more likely to buy real estate, and if interest rates are low, then also the stock market probably do better. Yeah. So it's quite correlated. So I guess in this one is that's something to be aware of, is if the narrative changes and shifts, because it could lead to a double whammy. But given at current prices where you get 5% div yield, 0.8 times price to book, low EV multiples, and revenues have been growing at a 20% clip, like this is very good growth. This is extraordinarily good growth in terms of revenue, and if they can maintain this growth, then there's no reason why they can't actually pay off this debt in record time. But yeah, this is cheap, very cheap in my opinion. But then again, this is financial companies or like brokerages are kind of outside my circle of competence. But given these metrics and the ability for them to grow into their market cap to grow into their enterprise value through revenue growth and expanding in its current categories, yeah, I see good things about this company. So yeah, this is the best opportunity of the three. I mean, OWL is not great. Low margin business. They're just selling food, importer, exporter, food and beverage. They have more debt than cash, right? Revenues don't seem to be improving all that much over time. 51% over 10 years, so it's not a lot of growth in terms of revenue. So yeah, low, decent dividend. I mean, it's pretty fair value in my opinion, out of the opportunities that you have at your disposal. And SPK is a little bit better than 3143 in that there's actually some, I want to say, it seems like there's some tailwinds to their auto parts business. It's a higher margin business. Yeah, they have more cash than debt here, so it's less levered. Yeah, and there's actually room for growth in M&A here in a scenario where they can buy other auto part manufacturers. And I'm also curious in their cross shareholdings because of they have a collaboration with Daihatsu. So like if you have a collaboration or joint venture with some certain car manufacturers, then you can be the first in line to make custom parts for that type of car, and that gives you a good advantage when you when they actually launch the vehicle, and that the customers can now acquire your parts, and you already have the customized parts ready and to go for customers to purchase. And their intent is to continue to increase dividends. So very, shareholder friendly, good corporate governance, let's say. And the revenue potential, growth potential is much higher. But I think it's due to the M&A aspect. So if I were to pick one of the two, I would say 7466 is better than 3143. SPK is better than OWIL in this scenario. But the best of the three today that we looked at is Akatsuki Group, in my opinion. So yeah, thanks for tuning in. That will be it. Let's see how many viewers. We have no viewers at the moment. Maxed out at 1 today, so slow day. But that's okay. That's part of the pre-screening process. It's meant to be boring. We're just pre-screening. So I'll probably do a stock review on 8737. So look forward to that today or tomorrow. So yeah.